Greetings to fellow traders. Thank you for coming into this session. The agenda for today is taking full advantage of precise trading zones. Okay, I believe everyone who are trading in this business do have a specific strategy and a specific game plan. Okay, the same thing. What we do is we use a price principle strategy. Okay, basically what it does is that means we do a projection based on the price and take our trading decisions based on the price turning points or expected turning points. So when you do that, chances are, you would be not be in the wrong side most of the time. And also do take note that price is the king. Okay, I know that some of you are using indicators, oscillators to take your trade decisions, but of course, it would be good to use to support, but not just use the indicators and oscillators to take your trading decisions based on that. And also, we would also be taking live trades provided there is a signal. Otherwise, we would be discussing on this any particular crosses which you may be interested or worthwhile considering or worthwhile taking a trade. And also do take note of the risk disclosure, right? This is purely education, and no matter what you do, you also you must have a specific stop for the focus. That means any one of these crosses, USD crosses, USD, Euro, Pound, Yen, Swiss franc, Aussie, Canada, New Zealand, Sing dollars, any one against each other. So if you feel that if you want to have a discussion on this particular any crosses, please feel free to type it out. At the same time, also specify the time frame which you're looking at, because see, trading is a game. You have to be very precise. Meaning, you have to know that what time frame are you focusing, because your view from a 2-hour chart can be different from the view on a daily chart or even on a 5-minute chart. So you have to be quite precise on the time frame which you are looking at or focusing or trading at. So please specify what time frame you look at, so at least we can look at the chart and we can discuss as we go on. And also do take note that the numbers when we where we get the zones, the precise trader trading zones or the levels is been derived by using these tools, like Fibonacci numbers, Andrews Pitchfork, moving average, trend channels, and Gann numbers. So as a result, you should know that, see, because when you come into trading, especially if you are a technical trader, you should be understood by now, meaning that the trading works or the technical analysis works because a certain group of people follow that specific tool and they control the market. So as a result, sometimes you feel like the moving average is working, especially when it hits on a specific numbers and starts to bounce up, because majority of the crowd are paying attention to that specific level. So that's the reason you see it moving up when it hits that level. But sometimes, the level may not hold, or, it breaches that specific level whereby you are looking at. So that on that basis, you should know that probably that crowd or that specific crowd may not be paying attention to that specific tool. So you should understand the fact that this is how a technical trader works, and we are working on probability. So so you must understand the fact that when you are making money, or when you are you should make out of the market the most, and when you are in the wrong, exit the fastest and the easiest way. That's how you become success in this business. And the trading tips, we have been giving trading tips every day, because what we believe is you must have some fixed guideline or a fixed game plan in order for you to be success. So the previous 3 which we have already discussed, today the trading tip which I'm going to discuss is never average your losses. Again, this is the contradicting a sentence, because see, sometimes if you know when is the market is going to turn, then you can do. But again, like what I said, it depends on how much of resources you have when you take a trade, because you must always prepare for a rainy day, right? So in fact, we do not recommend taking trades without a specific stop loss in mind. Even if you are planning to hold for a long term, what I would suggest is have a cutting point, meaning in the sense, okay, once the price goes beyond this level, then I'm prepared to cut loss. So at least you know that, okay, your capital is protected at all times. So this coming back to this sentence, never average your losses, because most pioneers, okay, most people who come in fresh to the business, what they do is they believe, you know, doing this mistake, meaning they take the trade, then the price goes against them, then they feel like, you know, we can buy some more, so average out, so you know we can get out at least break even, or at a profit. Try not to do that, especially, see, you must, see, what we believe is, see, when you take a trade, and if the trade goes against you more than, try not to hold a trade more than 3 days, because see, if within the 3 days, if the price doesn't come to your level, or or or, or chances are, you know, that means you may be in the wrong side of the market, and when you hold your trade beyond 3 days, chances are you are preparing for a big ride. So especially when you are trading against the trend. So coming back to this, try not to do that. But of course, if you have a specific game plan, especially like if let's say, you know, you're planning to hold just for an for a next 1 hour or 2 hours, then you can do. But again, like as I said, this is a contradicting uh, 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 phrase. But in all, you know, I think it would be best for you to stick to same rules, you know, like okay, take a trade with entry, exit, and stop loss. Then chances are, you know, your emotions would be uh, at bay most of the time. Okay, coming back to today's session, in fact, the market has been very quiet because one of the reason is yesterday there wasn't any US data, and today I think there's one data which is of course not much important data, but tomorrow Wednesday I think Fed chairman is giving a testifying tomorrow and the day after tomorrow. So as a result, you know, watch out for this you know, person talking, because he gives clue, and most of the time, you know, the market moves on, you know, some unexpected saying from his point. And also this today I think we have GBP and Euro data, so pay attention to that. And we don't believe in, especially if you are a scalper or day trader, try not to initiate trade when there is any data out. Of course, you can hold your trades when there is a data out, because it would be worthwhile, profitable. Of course, if you have a stop loss and entry, exit, and stop loss. So do take note that this is how you plan your trade. And in fact, the net change, okay, for today is, in fact, most of the market has been quiet, and is flat from yesterday's close. See, this, we use this as a guideline or a benchmark to take trading decisions. So whenever we see this, you know, when the price is trading above or below the prior change, I mean prior close, which is a New York close, then we use that as a benchmark to be a buyer or seller. So at least we have a benchmark, so to know that whether we are with the trend or against the trend. In fact, what I feel is the pound is quite strong against most of the crosses. If you notice, it has been green all around, but it is trading flat, meaning in the sense it is still flat because it has not moved out of the resistance zone 1. So when it moves out of the resistance zone 1, then we can be pretty sure that the market has breached and started to uh, move, and we can start to take a trade. So as it is at this moment, there isn't any trade signals, but as we go on, okay, when we get a trade signal, then we would take the trade. Otherwise, you know, if you feel that if you want to discuss on any particular process, you can ask questions. We can discuss. At least, you know, we can make full use of this session. While we are waiting for the markets to move, what I can do is I can just quickly run through the report. So at least, you know how to interpret when you look at the report. Give me a minute. In fact, this is a FX4 report. See, as I told you earlier on, okay, we use price principle, meaning a price level strategy. When the price starts to uh, trade on a specific level, that's where we decide to take our trade entry, exit, and stop loss. So let me look at maybe this example. Maybe for today, as I told you, most of the markets are pretty quiet. So maybe let's look at this New Zealand US. So and just discuss on this. I'll show you how to interpret while you use the report. Okay, this New Zealand US, the previous close is 70.15, and we give on 3 time frames. Okay, on the trend we discuss on 3 time frames. We have a hourly, daily, and weekly. So as a result, no matter what kind of trader, you can still use our report and start to take trades. So this hourly is, it says sideways while 69.60 holds. So basically, when we say sideways, what it means is, the market is not giving us any clue, or it has been moving in a range trading, and we use a 2 hour chart to conclude this. Later on, I'll show you the chart and to see how it has been analyzed. So when we use this, see it's sideways while 69.60 holds. That means we use this level as a benchmark to see whether that trend is going to be valid as long as this price is not breached. So what happens is, if sideways while 69.60 holds, what it's telling you is the tendency, the market has got a tendency to go up as long as this level is not breached. So, and the daily wise is also sideways while 71.55 holds, and weekly is sideways 73.20 holds. So the 2 higher time frames are giving you two different scenario, meaning in the sense the hourly is moving higher, and the daily and the weekly are pointing lower. So as a result, what you should be concluding or what you should be analyzing is, if I'm going to be a buyer, then I have to make myself clear that I have to be a quick profit, because I cannot be very optimistic, because the higher time frame is giving me a different picture. So this is how you analyze and interpret, and you start to take your trades based on the trend. So after you have read the trend, then you have to look at the economic calendar to see, because especially if you are a scalper or intraday trader, try to stay away when there is a data announcement. But of course, if you are a short-term trader or position trader, then you can use a different stop loss level. Then after that, you have a section 2. This is where we tell you what is to be expected or what is to be looked forward to take your trading decisions. Market summary is basically is what has happened in history from our report. But I will be paying attention to this trend, daily patterns, and today's strategies for you to do what is to be expected on the market. The trend wise, the hourly oscillators are mixed and the price is within the moving average, so cautious approach is needed. Hourly trend is sideways while 69.60 holds, and daily trend is also sideways while 71.55 holds. So expect the price to be choppy until the breakout happens. So what we are telling you is, you must understand the fact that we should be trading the market, right? And not what you expect the market to do. Whatever, no matter what happens, market is a king. That means, whatever the market gives you, take it. If it gives a clear signal, then you can hold on to your trade. If it doesn't give you a clear signal, then what I would suggest is book your profit with a very fast, a very small profit. And as far as the daily levels are concerned, these are the 3 levels we use as a boundary. So these levels can be used if you want to do a counter action trade, meaning against the trend. So sometimes if you feel like the market has moved higher and the price is struggling at any one of these levels, you should know that this is going to be the high or low for the day, then so that you can take your trade in this level. So this also can be a trading opportunity if you are a intraday trader or scalper. And we have the same thing goes on the low. We have 69.70, 69.25, and 68.65. So these are the levels to pay attention if you want to do a counter trend trade. The patterns wise, the daily trend was within the prior few days range. The hourly trend has been in a range trading, and expect a choppy session until the break. So as I told you, the market is been moving sideways, so we have to be extra careful, because we have to wait for the breakout to happen. And 69.60 and 69.30 are the critical levels to watch to maintain the bullish outlook. So what we are saying is as long as this levels hold, the price is expected to go higher or the price is expected to move higher. So have this level in mind, and this levels can also be used as a stop loss if you are a, a position trader. And on the 5 minute is along the horizontal channel, and the price patterns are suggesting no clear direction until the break, and the opening price principle are mixed, so cautious approach is needed. So overall, we are saying that this market is being cautious, and it is moving in it is very choppy. So you have to be extra careful and try not to be over optimistic whenever the breakout happens, or when the move happens. And we also give three levels. If you are bullish, these levels can be used to book your profit or can be used for entry. And all these are mainly used for scalpers or day traders. So these are the levels for you to pay attention to entry. So in today's strategies wise, we also give for two types of traders generally, like conservative traders and aggressive traders. So conservative traders, if we feel that the signals are very clear, then we will initiate. Otherwise, most of the time we will give for aggressive traders. Also, on this scenario for today is trade the bulls and bears levels only, meaning in the sense you only buy or sell at these three levels for you to take your initialization, because right now it is in a range trading. So as a result, you do not expect a big move happens until the breakout happens. So overall, I think if you have read this, so this is what is to be expected for today or the next couple of hours. So you prepare yourself, or you start the day by looking at this two levels. This is where we call it resistance zone 1 and support zone 1. This two levels is where it tells you, or it gives you a trade signal when it breaks or breaches any one of these levels. So on this scenario today, like as I told you, this is a sideways market. If you recall, earlier on we said it is 59.60, that's as long as, and trading at 70.07, right? So it's trading at 70.07. So it is trading in between the resistance zone 1 and support zone 1. We call it a no man's zone. So whenever the price moves into this no man's zone area, price is expected to be choppy. So if you are a scalper, then what I would suggest is try to stay away from the market. Short-term trader, if you are a risk taker, then you can still initiate a trade. So the trade initialization, basically it comes on two types. One is if the low, okay, if the low, I repeat that, if the low is within the support zone 1 or even support zone 2 and moves higher, that can be a trading opportunity as well. But again, you must understand the fact that the market, when it moves to a no man's zone area, it becomes very noisy and choppy. So when as long as 70-40 is not cleared, the price is expected to be choppy. So this can be about 30 to 40 pips move you can get on this signal, and this can be another trading signal. And this, so in other words, I have 4 levels to book my profit. So these are the 4 levels I'll be planning to book my profit. So in other words, when I buy or when I long at 70-40, I should know that there is a minor resistance which is 70-55, and you can expect the market to reverse at this level. So if it doesn't, then you should know that the next level would be 71 figure, which is, it has got another 40-45 pips move, and we have a 71.20. Then the next one is 71.80, and of course we have a daily level, which is where to see valid, that the validity of this trend. We have to pay attention to this hourly, daily, and weekly level. So these are the levels you use to entry and book. You have the 2 levels whereby I'm planning to enter. And the one you should expect, and the trend should be unless the thing in the hour should expect. The resistance zone 1. So simple, and also this all is a number. So you should understand the fact that it all is a number game. So when you do at a specific level, chances are you would not go wrong. And of course, the frustration would be, sometimes you are wrong, you are right in your analysis, but you took you key in a trade, but you missed the price, and the profit is profit level is attained. then the frustration will be there. But I think you have a specific game plan. So as a result, when you do that day to day, chances are you won't go in the wrong directions, and you would be um, uh, stick, sticking to your rules. Okay, this is how you use the report. And with now, I can answer your questions. Feel free to ask any questions or any crosses which you want to discuss. We can discuss on, and please type your specific also the time frame which you're looking at, so I can show and discuss on the chart. So while we are waiting for your questions, okay, what I'll show you is the chart, the New Zealand US which I've just discussed. I'll show you the chart and I'll discuss on this. Let me show you the chart. See, this is a 2 hour chart, okay, and this is New Zealand, US. Let me get right. So if you notice on this particular chart, it has been in a range trading for almost like 3, 6, 9, 12, almost like about 24 hours, meaning in the sense for the last day, the whole day, it has been in a range trading. So, it is, I think, when the market is get caught in this kind of range trading mode, it is best for you to stay away from the market until the breakout happens. But once the breakout happens, then that's where the real money is, and we can make money when the breakout happens. Otherwise, you put in, and you need to have a lot of patience, and especially when the market is caught in this kind of range, chances are you would not know where is the breakout is going to happen, because even though right now the price is trading above the moving average, and if you see this like RSI is about in the region of about 54. Okay, let me show you this. Yeah, RSI is about 54, and it's all flat. So I think it will be best for you to uh, stay away from this market until the breakout happens. And of course, once the breakout happens, then you should know that uh, that can be rewarding, right? So any questions or any markets you want to discuss, feel free to ask. So at least we can use this session to really discuss, so that it would be best for you to understand how easy can be trading when you trade on price levels, rather than you stick to try not to take trades on market orders, because what we feel is when you take market orders, because it's the end of the day, is must understand that price is the king, right? And we are, and in fact the whole world is been trading on the price. So when you feel like and on a specific level, then chances are your emotions would be at control, right? So that is my humble request. So try to do that, so at least you can be a disciplined trader. Okay, the question is Euro USD. So if you see this Euro USD chart, okay, is a similar picture, right? And it has been moved up, right? And it has been moving in a range trading. So if you notice on a bigger scale, in fact, previously, our price target was 34.80, right? And I think it went to a low of 34.45, and right now it is having a pullback. But it is still not given us a confirmation that the market has reversed or turned up, right? So it is still too soon for us to conclude that move. We have to wait for the market to give us a signal. So, what I feel on this particular market is, okay, on this scenario, I still feel that it has got some upside bias, meaning in the sense it has got more room to go higher. But again, the upside can be limited. Okay, let me show you the trend line or trend chart, trend channel for you to see. See, if you see on this particular chart, Okay, give me a minute. Are you able to see the chart? Yeah. So if you see this, we have drawn a trend channel. So even if the price breaks higher, that 36.70 would be a immediate barrier. So in other words, that means, in fact, for today's euro, our resistance zone one is 36.30, right? And our support zone one is 35.60. So what we feel on this particular instrument is, as long as the price doesn't go below 35.60 or even 35.40, okay, 35.60. Let me point this 35.60 and even 35.40, right? As long as the price doesn't go below this and 136.30 is breached, right? I feel that the price can go. Of course, there is a 36.55, which is yesterday's high. That price has to clear. So once it clears, then the next immediate barrier or immediate price target would be about 36.70, and I have a next level which is 37.10. So what I do is, like as I told you, we have a specific price entry, price stop loss, and also a price target. So when you do that, we know that, okay, this is how the price is expected. So in other words, what I would be doing is, if I'm going to take a trade right now, I would not want to do any trade on this because it is still it's in a range mode, or it's in a consolidating. If you see on a 5-minute chart, okay, this is let me show you on the 5-minute chart. Okay, if you see this, it has been moving like a seesaw, up and down, right? So we have to wait for the price to break, and what I feel is the 36.30 is going to be our immediate barrier, followed by 36.55 and 36.70. Okay, so these are the levels whereby I would want to pay attention if I'm long and I want to book my profit. So this is how I put my game plan. So when I do that, so my game strategy and sorry, my game plan and my strategy are pretty defined before the entry is made. So when I do that, this is where I plan to book. And of course, if I feel the risk versus reward doesn't justify, I do not want to take the trade, then I let go of the trade and I wait for better trading signals. Because see what I believe, what I do is, because when we focus on 38 crosses, uh, every day we do get an opportunity, right, on any one of the crosses. Because you must understand that trading a couple of years ago, meaning 10 15 years ago, it's a different ball game than what is trading now, so so as a result, like today is a very complex world, but of course information is readily available. So you should be learn to work smart, because learn to choose which cross is been moving and which cross is best for you to trade for the day. That makes you catch most of the moves day to day, rather than if you trade on a specific cross. Let's say you only focus on Euro USD. Chances are you might get two three signals a week. When I said two three signals, that means good, really good signals for a week. So when you trade on other crosses, so every day you can be in the business and you can start to take your trades based on the technicals. So this is what I'll be doing on this particular instrument. That means the as long as this low, that means if you see today's low is 35.80, which is well above the 35.60. So once it breaks, then I can go for a quick move on this. But of course, if you want to trade, it's up to you to decide whether you want to take this trade or let go of this trade. Okay, the next question is, you mean that we have to wait to reach 136.70, and here we have to sell waiting to pull back the trend line? Okay, it all depends what kind of trader you are. See, because see, trading is a game played by different players with different risk appetite and different resources, right? So what I meant is, because overall is, if you ask me, okay, whether do you want to take my trade, I would not want to take this trade because, as I told you, this trade has been moving it has been in a very choppy, and it is in a range trading. So if you feel that if you want to become a quality trader, right, then this kind of trade should be avoided. And what I would suggest is, you take a trade when your risk versus reward is at least 1:1, or 1:1.5, or 1:2. Then that would make a viable trade, or a good trading opportunity. What do I mean by that? That means, you see, as I told you, I know that these are the levels I'm watching to book my profit, right? So, and if I'm going to take now, let's assume that I'm going to take my trade now, and if I'm going to put my stop loss below this 135, which is a low, which 135.80 or 135.60, then I know my risk versus reward doesn't justify. So I may not want to take that trade, or I may let go this trade. So that is what I meant by, you must have a specific game plan for you to take your entry, exit, and stop loss. So when you do that, so at least you are well prepared when the move happens, and you should also know what is to be anticipated when the price goes against you, or when the price is in favor of you. So you have a specific game plan. The next question is, can we look at euro yen? What is your view for today? Okay, in fact, euro yen, see, when you trade on crosses, okay, the good thing about when you trade on crosses, okay, let me show you the chart. The When you trade on crosses, the good thing and the bad thing is, okay, the good thing is, of course, if you understand how the crosses are traded, or how the crosses has been working, then it should be very easy for you to interpret and take your trading decisions. But the bad thing is, if you do not understand, chances are you may be doing the wrong thing. So if you notice on that, let me go on a daily chart, from the daily chart. So if you notice on the daily chart, for the last 3-4 days, it has been in a range trading, meaning one day is up, one day is down, and in fact you see a doji here, indecisive. The market is really uncertain, right? So this is the bigger picture, and of course yesterday the the bears were in control, even though it's within the range, but the bears were in control. So so if you look on that hourly chart, okay, what do I feel, or what is my view on this particular turn has got, right? And of course, okay, let me give you that figure for today, euro yen. Okay, the euro yen, the resistance zone 1 for today is 124.25 and 124.45. So in fact, the high, you remember earlier on I said the high or low would usually form around this zone 1, zone 2 levels. So in fact, the high has been at 124.25, which is on that resistance zone 1, and the support zone 1 has been 123.60, which is precisely the prior swing low, which it happened on the 22nd, right? So in other words, once the price breaks that 123.60, all right, let me show you on a lower time frame. Okay, so in other words, once it breaks 123.60, chances are, the price is going to go lower. But again, you must understand that, as I told you earlier on, when you trade euro yen, you should have your attention on both the crosses, euro USD and dollar yen, right? So when you see both the euro yen and dollar yen, in fact, the euro is 136, is trading at 136.10. So when the euro moves higher, that means when the euro strengthens and when the dollar yen is also strengthened, then you don't see a big move happening on the euro yen because when both are moving in the same direction, that means both are stronger, then of course the move will be like it's like a tug of war. So as a result, you don't see a big move happening on the euro yen. But the big move comes when the euro strengthens and the dollar yen weakens. So we have to see which cross is dragging the other cross, meaning the euro yen. So it's always either the euro USD will drag the euro yen higher or lower, or the dollar yen will drag the euro yen higher or lower. So to know the answer for that, you have to see where is the dollar yen and the euro yen trading, whether is it trading above or below the support zone 1. Then you can conclude to see whether the price is going to break higher. So right now, as it is, I don't see anything is happening or anything is expected to happen until the euro or the dollar yen breaks out of the range 1, which is we call it a resistance zone 1 and support zone 1. Earlier on, I showed you the example. So use that level to do your analysis. So when you do that, things would give you a clear picture, and you should know what is to be expected. So the next one, he said, I only trade euro yen. Should I look at other crosses to make my decisions on euro yen? As I told you earlier on, when you trade euro yen, you have to pay attention to euro USD and USD yen, that means the dollar yen. So you see which direction both these crosses moving, and that's where the euro yen will start to move. So you have to use this analysis to get you a clear picture and gives you a comfortable level to take your trade, right? Okay. Any other questions or any other market you want to discuss? See, the market has been quiet. Like as I told you, we trade only at the market. So meaning in the sense when the market gives you the signal. So when the market is not giving any signals, I think it is advisable and it is wise enough to stay away from the market until the break happens. Any other questions or any other market which you want to discuss? See, you can ask on any of the 38 crosses. I would be very glad to answer your queries, or we can discuss. Okay, the question is, if the euro USD is going up and the dollar yen is going down, what will euro yen do? Okay, you see, you try not to get yourself mixed up with this. So you try to talk in terms of strengthening or weakening. So when you do that, so at least you know that strength against weak is a better choice rather than strength against strength. So when you do strength against strength, then you have to see which is stronger than the other cross. Then that's where you see the major move happening. So when you look at euro USD, that means euro strengthening. That means I see the euro USD going breaking above or breaching above 136.30. So as I told you that my next levels are 136.55, 137.10. So you can see when the price of the euro hits any one of these levels, you see the euro yen making a move or making a turn. So this is how the market works, and this is how you should be analyzing or interpreting. So to answer your question, when the euro USD or the euro strengthening and the dollar yen, that means when you say USD yen is going down, that means the yen is strengthening because the yen is a counter cross. So dollar is a main cross. So when you see this, that means the yen is strengthening. So euro is strengthening, dollar yen is also strengthening. So euro yen will not move anywhere. That means it is going to move like a seesaw. That means it's going to move up and down, and it's not going to give you any clear clue or any clear direction. So when that thing happens, try not to trade that cross. And of course, the best trading signal or the best trading opportunity would be when the euro is strengthening and when the yen is weakening. That means the dollar yen is also going higher and the euro is also going up. Then you see the euro yen moving higher. The other way is the euro is weakening and the dollar yen is strengthening. So when you do that, the euro yen will weaken. So try to understand this concept and interpret this phrase. So at least, when you trade crosses, you would know what is to be expected and what is to be looked forward to. The next question is euro Canadian, right? So to talk about this cross, okay, as I told you, the theory is very simple. You have to see, or you have to pay attention to both the cross, euro USD and USD Canadian. So when you understand that this picture of these two crosses together, then euro Canadian, it would be very much more easier for you to interpret. Excuse me. So when you look at this cross, again, this I look at it 2 hour chart. It has been pretty down for quite some time, and it has been range trading here. So even though it's range trading, I see what I feel is the high is still not seen yet, right? So maybe I can give you the levels. Let me give you the levels. Okay, this Euro Canada. Okay, I see the resistance zone 1, which is 14215. Okay, um, give me a minute. Yeah, I see 14215 is our resistance zone 1. Okay, and also do take note that whatever the level I'm saying, try to use plus minus 5 pips for the majors and 8 to 10 pips for the other crosses, because you must understand the fact that different spread, different brokerage firm will charge different spreads. So as a result, sometimes when you key in your orders, your stop loss, or even your entry, I wouldn't want you to miss your entry price, or your stop not being triggered, or that kind of stuff. So I hope you understand what do I mean by that. So try to use a variance of plus minus 8 to 10 pips for other crosses, and for the majors it's about 5 pips. So here for Euro Canada, I see 14215. There is a barrier, and for my support zone 1, I see 14145. Okay, so in fact, this is the picture. Let me go on a 5-minute chart and show you what is to be expected, or what is to be expected on this particular instrument. So if you see on this 5-minute chart, right? Okay, let me remove this. Okay, here the price is showing of some way of bottoming, right? But again, this is not a very clear indication that the price has already bottomed. So, but I feel that the price is going to go higher, but the upside is going to be limited. So the levels whereby I would want to pay attention is 14215 is my resistance zone 1, and of course you see a minor high, which is 14230. So this would be my immediate barriers for this cross, right? And my price level, the price target which I'm planning to do, or the price, the maximum I can expect this move to happen is, okay, we have another 14260, right? And 14330. Okay, 14330. Okay, these are the levels whereby I would want to pay attention to book my profit if I'm long. But of course, you have to you should be looking to long, because as I told you, this price is not seen the high yet. But again, a cautious approach is needed, because this market has been give me a minute. It has been in a range trading. So as long as this price is in a range, try not to be very optimistic, or be very enthusiastic to book your profit. So so this trade is, to me, it's best for me to time. I would wait for the price to move higher and look to a short selling opportunity. That means, near that 14330, or even the next level, I have to do a projection. So overall is, would be my view on this. But I think right now, as I told you, this has been in a range trading. So it'll be best for you to see which is dragging this Euro Canada higher, whether it's the Euro USD is going to drag or the Canadian dollar can is going to drag higher. That is, you have to see on day-to-day basis for you to do your analysis and take your trading decision. All right. Okay. Any other questions before we call it off? So I think we had a wonderful session. Okay, thank you very much for coming to this session. And I also want to take this opportunity to thank FX Street for organizing this event. We have this session weekly with FX Street on every Tuesday and Friday. Friday is about 12 GMT. So feel free to come into this session if you feel that that this session was interesting and worthwhile to pay attention to this event. And also, looking forward, if you feel, you want to bring in your friends, just bring in. So at least, we can, because, the more we discuss, I think the more we learn as a group, right? And we also have a webinar, which is every Wednesday. So if you feel, if you want to come in during that event, also it's about 12 GMT. You can just, it's also free, right? And our website is precisetrader.com. If you want to write to us on any specific topic, we would be very glad to be of service to you, right? So with that, I think I conclude the session. Okay. Thank you once again, and looking forward to see you again. Goodbye.